Alright, so this is a tutorial on the wave chart that I created based off of what Wyckoff talked about. So the first point is purpose, then up waves and down waves, etc., etc. So I'll be going over this. Alright, so what is the purpose of a wave chart? Is it teaches tape reading. That is why it was devised by Richard Wyckoff. It was used to teach tape reading. And second purpose was to allow for lower time frame entry into a higher time frame support and resistance level. And because the risk on the wave chart is much smaller. So it was designed as an entry, a lower time frame entry mechanism. He used 5-minute charts along with along with a daily. And he basically explained that the reason to do this was to get big reward to little risk. And final purpose was for day trading. The idea here was there were multiple trend turns and a day trading vehicle. He needed something that would allow him to trade intraday, and this was devised. The point I want to make around about day trading is that although he used the 5-minute chart, he explained that the time change, the trend changes 1 to 3 times a day. Really, most of the time, I've taken a look, and I think the 1 minute is where you have 1 to 3 trend changes. The 5-minute, many days, you just won't have any activity. It'll just be dull, and you can't really see the trend changes. But on the 1 minute, there are at least 1 to 3 trend changes a day, typically. Second thing I want to mention is up waves and down waves. So on a wave chart, you have up waves and down waves. I mean, it's a binary thing. You have up and down. That's it. This makes it very favorable versus other methods where you have so many patterns, you have so many candle patterns, or so many different types of patterns, and you have like entire lexicon of stuff. So this makes things very simple, up or down wave, and then they are quantified to determine what they are and what they mean. The factors are time, price, and volume. The key is time, price, and then volume. Alright, so initial wave chart used time and price, and then later on he started incorporating volume, and then after that he started incorporating activity. But time and price is the basic thing that you want to use, basic factors that you want to use. Or you can use price and volume, or you use all three. Alright, so this is really important because these are the major factors, time, price, and volume, that he talked about. The turning point. So what he's looking for is turning points using a wave chart. The setup on the wave chart is the turning point. Alright, so the whole point is to identify turning points at key SNR levels. Okay, so that's your quote-unquote setup for the wave chart. And I'll explain all this in a minute. The strategy. What is a strategy with wave charts? Strategy is higher time frame level, alright, support resistance level. So for example, if a stock is in a range of $30 to $35, on the higher time frame, try to go long at 30 and short on 35 using the wave chart and see if it gives you a turning point at the support and resistance levels. If it's trending, look for a retest of Ice and Creek, basically retest of support, retest of resistance, retest of the breakout or the breakdown, and that's where you want to see a change in trend on a minor time on the wave chart. Exit once you're in. You look for either level or certain types of behavior. Alright, like a strong wave or something like that. But it's basically two things. Either a level of interest where you know the other side is going to enter, or a behavior like heavy volume coming off the bottom or whatever, change of behavior or shortening of the thrust or something that's telling you that the trend is in jeopardy, or a really strong wave which we just saw into. The entry, I talked about the exit, about level of behavior, and the entry is right after the turning point down. And I'm going to explain this now. All right. So the factors are time, price, and volume. We start off with time and price. So the first up wave right here is 15 minutes and goes up 15 ticks. Then it pulls back on 10 minutes and 10 ticks. What does that mean? It means the up wave is stronger than the down wave. Why? Because there's more distance and duration, meaning distance in terms of ticks and duration in terms of time. More time and more distance, therefore the up wave is stronger and it continues. The up wave goes up on 20 minutes and 20 ticks, pulls back on only 10 minutes and 10 ticks, again stronger. And comparing the up wave to the prior up wave, it is also stronger. So notice how I'm comparing the up wave to the down wave as well as the up wave to the prior up wave to see if it's getting stronger or weaker. And when you do this with terms of volume, you're going to start noticing the volume typically starts declining from upwave A to upwave B to upwave C to upwave D. It has a tendency to decline and then shoot up in volume where it terminates the trend. Anyway, so from this upwave, we have 20 minutes and 20 ticks. It pulls back to 10 minutes and 10 ticks, and it rallies again on 15 minutes and 15 ticks, pulls back on 10 minutes and 10 ticks. What do you notice? Basically, there's no real supply until here, where it goes up for 20 minutes and 22 ticks and pulls back 15 minutes and 15 ticks. At this point, the distance and duration has increased significantly compared to the prior 3 down waves. Here, it has increased, and does that mean that it's going to change trend? No, not yet. But it is an increase in time and distance, so distance and duration, and that is a warning. Now in the next up wave, it only lasts 10 minutes and 10 ticks. 10 minutes and 10 ticks is less than 20 minutes and 22 ticks, 15 minutes and 15 ticks, 20 minutes and 20 ticks, and 15 minutes and 15 ticks. So the up wave is smaller in terms of distance and duration than the prior 4 up waves in the trend. And it is right after a selling wave that has the most amount of distance and duration in multiple down waves. It means that the selling is getting stronger and the demand is getting weaker. Supply is getting stronger, demand is getting weaker. That now confirms that this was a change in behavior. The prior rally above it was the climax, and the current rally is a lack of demand. These 3 behaviors together create the turning point. And then after that, you have a rally down, and the rally down is confirmation. It's a lower low, and it is confirmation that trend has turned. All right, now where do you take the entries? You take it where the X is. So after the lack of demand, there's a reversal. That reversal can be taken. If you miss it, then the second pullback, if it is weak, meaning 10 minutes and 10 ticks is not greater than 10 minutes and 10 ticks on the prior up wave, it means that it's still weak. So then when it turns down again, a short can be established. Now, what are some variations of this? One variation is when you have a climax, many times you have a secondary test. That secondary test can look like a double top. So that secondary test can be at or slightly below or slightly above. When it's slightly above, it looks like a shortening of the thrust. When it's slightly below, it looks like it's tagging the high bar in the climax. So it looks very similar to M. So these are just variants where you have a secondary test or shortening of the thrust with just a type of secondary test. That can happen right after the climax. But typically this is the case. So I'm going to kind of show this from a practical perspective using the behavior today. So the market was in a downtrend, ding, 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 right? First thing you notice is heavy selling, heavy selling, heavy selling. Now, sometimes you won't see the climax very clean because this is a 1 minute chart. You might see it on a 5 minute chart, it might be there, another time frame chart. But, if it's going down like this, it's heavy supply. Until what? Until what? Until right around here. What you have here is you have a shortening of a thrust. All right, so that's secondary testing. This is a shortening of a thrust. So you don't really see the climax that clean, but it's there. Yeah, I just have to change the time frame and I'll see it. So what I do notice is a shortening of thrust. And what does that mean? Again, shortening of thrust is the secondary test. It's the type of secondary test. Okay? And you start noticing that when that occurs, the supply diminishes. It goes up to 30, down to 20, down to 7, down to 6. So it diminishes. This is, I don't want to call it pattern, but I mean, you can clearly see the supply is decreasing as it's driving lower. Now, what happens here is the lack of supply, that secondary test, the lack of whatever, is encouraging the bulls to go long. Now, they may go long for a plethora of reasons, one of which is to cover their shorts or to buy at low prices for a longer move up, or to just, Wyckoff talks about like stopping or the demoralizing of a rally or something like that. But in general, it's typically short covering, or if this is a level of interest, to buy at that level for the next rally up. Whatever the case is, the point is supply is decreasing and demand increases greater than 1, 2, 3, 4, 5, 6, 7, at least 7 waves. That's more than 1, 2, 3, 4, 5, 6, 7, more than the entire trend. But that is your change of behavior, or you can call it sinus trend, but it doesn't matter. All right, so it just means that they're coming in, the bulls are coming in. Supply is exhausted. So, I mean, that's what the secondary test is explaining. It's unable to push. Tried once, tried twice, and went up. So, after that, pulls back and holds. Very, very, very important to wait for the pullback. If pullback must hold. Otherwise, it can just drive right through the climax low or the secondary test low, can drive right through. It tests one, tests twice, tests 3 times. The volumes are 7, 5, and 9, all less than 17, and this establishes what you call a zone of support, a broadening the zone of support. Okay, because of 1, 2, 3 tests, it broadens the zone of support right on top of the Minor Creek area, right here. Tag 1, tag 2, tag 3. Okay. Now what? Now the market rallies. This right here. So we have COP. We have a lack of supply. I mean, you can pick anyone, 7, 5, or whatever. The 9 is actually a little bit increased, but it's much less than 17. So somewhere around here, establish a lack of supply. I would have to say the smallest one here is 5. So, what is lack of supply? On the secondary test, meaning it goes down in 7, then goes down in 5. And you might say, oh, what about the 9 and this and that? There's a little bit of effort there. There's some sideways movement there. So that's what's creating that 9. Right? So after that, you have the secondary test, you have this change of behavior, you have scarcity, and then you finally have the confirmation, which comes in the form of a higher high. And this higher high has more volume, it has all whatever it needs, it has. Then after that, it pulls back, 1, 2, and you see these volumes are small, 6, 4, and again you have this 9. This right here is a spring. This is designed, a spring is just like a type of shakeout. So, I mean, that's the way I view it. The key is it drives, it goes slight penetration, and an immediate reversal. That's how you know it's a spring. And this also talks, this is really important because there are going to be a lot of people that are going to have their stops right there. That's designed to run the stop, so they'll have to sell and the other side will buy. Okay, that'll create the necessary buying pressure. First of all, it'll transfer inventory. Second, it creates the buying pressure for the increase in price. So if you get stopped out, watch the bar right after, and it's high and close, big bar, re-entry long. So you see all of the components there, the pullbacks, change of behavior, confirmation, etc. This is how it looks. All right, it's just constantly, the variations are so many, it's infinite. But the elements are the same, and most of them are there. After that spring, it makes a higher high. So it makes a higher high, pulls back here. Like if you don't think the rest are, you know, scarce or whatever, this point here is the lowest. And here the market, I have to say, is again on the springboard. Why? It cannot go down. There are two things to call about this action. First thing is that from the spring, when it went to the highs here, there was absorption right there. It went from a spring to up here, and across those highs, it absorbed the area. That's why it's going sideways like this. They try to sell, they get absorbed, absorbed, absorbed. It tightens and then goes up. Comes back down, holds, and fire away. Okay, this area right here, this point, is a very critical point. This shows complete lack of supply. Right there. You could even say that the market is on a springboard at that position. Why? I mean, look at it. It's the lowest price volume, whatever, in all the waves. And look what happened afterwards. Because there's no supply. All right, it went down on 300 contracts, making progress of $60. So down $360 is not gonna do nothing. And then it rallies up, pulls back, rallies 4,700, 185 down on 1,600, down on 75, up 3,800, $160, down 4 and $75. And then after that, here, like you can't really do anything about this. Like you know, there's nothing you can do about this. Do you know that it's going to stop here? I don't know. You just don't know. It's going to stop there. When price goes there, there's no indication here. The prior pullback had only 400. The rally, however, was weak. It went from 38 to 9, but I mean, there could be inside consolidation. There's nothing here that tells you it's going to puke, but that's what happens. Pukes, retests, goes from 35, 34 to 8, not enough to break through. So it tests to an area. That area of the, I think this is a breakout right here against this level. One of these two bars. So rallies, pulls back on 14, up on 9, down on 8, up on 700, down on 900, up on 2, down on 4. And it's just drifting sideways. I can't really read this. This is just range bound behavior. It's pointless to try to do any of that. This is readable. This is understandable. The rest is just range bound behavior. You don't really know what's going on. All you know is that there's a level up here, another friggin' level right here, and you're in the range. Alright, so now these factors are factors of a turning point. So sometimes you won't see the climax clearly, a lot of times you will. Sometimes you just see a shortening of thrust or whatever, but sometimes you see the climax, but you don't see this change of behavior very clearly. You just see a rally. You know, it's not very strong, but it's a change of behavior, or it just looks like a rally. And and the other variant here is many times you will see effort. So what will happen is near the lack of demand, either before or after it, you'll see one more wave, which will look like this. And then it'll crack. So it would be, here would be the effort. That would be the effort. That may come before it may come after it. It's just unpredictable, but you know to expect it. Alright folks, so that was a tutorial on the wave chart with a real life example today. And these are the key points about the wave chart. Thank you.